What's going on, everyone? Lullet here. Dave Ramsey is a lot of things, but one thing he isn't is he's not a fan of credit cards. He talks about how consumers spend on average 12% more per transaction when they swipe with plastic. He also talks about how you feel the emotional pain when you pay in cash as you see your dollar slowly drift away. The point here is, if you're paying in full and paying it on time, your whole credit card statement, credit card balance, however it is, credit cards are the number one way to purchase something versus using debit or cash. If you look at how credit card companies actually make money up here, then basically you'll never use debit or cash ever again. But today, I want to expand upon this on credit cards versus debit cards and really dig deeper. So let's get straight into it. Super quick, this is one of those bullet point quick jab type of videos, so just a heads up there. Starting off with interest, you got credit cards, they do have interest, and they can range all the way up to 30% APR. But if you pay your bill in full and on time, you'll never hit interest, as long as you pay your statement balance in full by the time it closes. And you have around 3 weeks in general for your statement to close, so you can always avoid paying interest for life even when you're swiping credit card plastic. On the other hand, debit cards, they don't have interest. It is what it is. Rewards. You have credit card rewards in terms of points, miles, cashback, so much. When you're spending, you do get rewarded. As long as you're not paying interest, those folks that are paying interest are paying for your rewards. Debit cards. Some of them do have rewards, don't get me wrong. Shout out to the Cash App debit card. Crazy rewards there. But in general, on the whole general scale, credit cards rewards better than debit card rewards. You got benefits like Priority Pass Lounge, which you can get with the CSR, aka the Chase Sapphire Reserve. You can get it with the Amex Platinum. You can get it with the Hilton Amex Aspire card, the 450 annual fee version, etc., etc. Debit cards, benefits, there is kind of a side benefit. If you're with a bank for X amount of time and you do have good balances and good history with them, there are other products that debit cards, aka these big banks, for example, your Bank of America, Chase, Wells Fargo, PNC, etc., can actually have in terms of benefits overall as a structure. Coming to fraud, liability, and purchase protection. Credit cards got your back. They give you a credit for the amount that you claim as fraud, and while they investigate and come to a conclusion, you don't even need to worry. It's totally hassle-free, and it's super quick, and most companies have good customer service regarding this type of situation, especially shout out to Chase and Amex. On the other end, if you have debit card and you have some type of fraud, if someone took money directly from your checking account or whatever the story is, that money, aka it being like cash, it's gone until something really happens. And there's not usually an incentive for these big banks to even do anything about it, for better or worse. AKA, honestly, that money is more or less gone, because if cash just disappeared or you lost your wallet and there was cash in it, it's more or less like the same with debit cards. I'm speaking from experience, and it's just what it is. Coming to the mind in terms of psychology as well as financial impact. When we're talking about credit cards and what it could actually mean for you in terms of debt and years of debt and how much debt one can sink into with credit card debt overall, it's no secret. It's the worst. And debit, if you have $100 or $1 million in the bank, if you use it, that's it. You've used it. There's no more. You can't get any more. There's no less. There's no more. You know exactly what you have. So from that perspective, of course, debit at least gives you that kind of satisfaction that, hey, I'm not going to go into debt. On the other end, if you ever need even $1 more than what you have in your checking account to pull from your debit card, then that's going to be an issue. So in cases of emergencies, or for example, if you're actually going on a trip for renting a car, renting a hotel, certain type of services or products, you'll need a credit card. And that's mainly because that charge could be variable. So when we're talking about being at a gas station and they pre-authorize your card, $99, if you use a credit card, no worries. You know, you have some credit line, it's pre-authorized, so you'll be okay in a couple days. But with debit cards, that pre-authorization of $99 may prevent you until that transaction clears into doing something else that you may have planned to. So psychologically, you're kind of like, man, I can't even do something even though you know you're good for the money. So credit versus debit here, naturally to each their own. Again, paying in full, paying on time shouldn't be impacting you financially, and psychologically things should be streamlined as well. come in at referrals and sign-up bonuses. I can refer folks to credit cards, and I'll get handsomely rewarded for it, whether you're talking about Chase, Amex, and select few other cards. Debit cards, not so much. There are certain referrals, like shout out to Capital One, for example. Their basic checking account, if I refer you or vice versa, I get $25, you get $25, like this. On the other end, you got sign-up bonuses. Sign-up bonuses are super famous and make credit cards as an industry super popular, where some cards, one sign-up bonus can allow you to travel the world literally. So that's crazy. And talking about on the other end with checking accounts, not so much. You got some $200, $300 to open a checking account, to try it out, etc., and that's good. But in the long term, these sign-up bonuses and the value you can get from credit cards and how many different variety in terms of credit cards one can have versus checking accounts speaks for itself. Talking about annual fees. Credit cards, they're infamous to have them, but also, if it works for you, these annual fees could pay multifold year over year and for the long term. It just depends on the situation. On the other end, debit cards, they don't really have an annual fee per se, but at the same time, checking accounts can have their monthly fees, and yeah, they need to be waived accordingly. And in the same time, I'm like, man, your money is stuck with a company or a bank, and you're paying basically to use your own money, while on the other end, you're getting rewarded per se, as long as you're paying in full and on time, with credit cards for spending that same money. There are other services that come with a checking account, and it's kind of standard, and that's fair, but credit cards also have certain standard advantages in general. Periodic fees, what do I mean? I'm talking about late payments, return payments, and overdraft fees, etc. With debit cards, when you take above your limit, you can either call them up and say, hey, decline my transaction so no fees go through. But in general, common practice is you're going to overdraft and hit an overdraft fee in general by default with checking accounts / debit cards. On the other end, credit. You can keep swiping. Obviously, don't max out your card for obvious reasons. But at the same time, regarding late payment fees and otherwise, if you're getting into that type of territory, then maybe credit isn't the best. Debrief time and some shout outs. Shout out to a couple debit cards regardless of credit being better than debit in my personal perspective. Shout out to the Charles Schwab debit card where you have free ATM withdrawals worldwide, no foreign transaction fees when you swipe. It's a Visa card, so there's huge acceptability. And then you got Square's Cash App debit card where you have awesome benefits as well. But I'll skip over this for now, but shout out to those two debit cards. My take on Dave Ramsey is that his advice is very, very, very good for the majority of folks. And what he preaches isn't wrong. I just think that it depends on what you're trying to achieve. And so his construct is based around certain parameters. And those parameters are very specific, and I'll leave his ideology out of it. But the point is, regarding finance and planning, it's not wrong. If you want to not be in debt, if you want to be well off enough by doing certain steps and following his baby steps, for example, Dave Ramsey, he's the man. But then if you're trying to get to that next level and to break out in terms of earning more income versus just saving and budgeting and that perspective, then I think that maybe it's not the best. And so coming to credit, regarding his principles, you want to save money, you want to not burn money, you want to be careful with money, you want to respect money, which I agree with respecting money as well. And so it makes sense that he advises folks to not use credit. And so it makes sense in his ideology. But overall, debit over credit or credit over debit, I say credit wins almost 10 out of 10 times, aka there's always going to be that 9 out of 10 times where maybe, all right, I'll give it to the debit card, just depends on the card. But with that, thank you so much for coming to the end. You know how it is. Like, share, subscribe. My name is Lalit again, and cue the outro time. Okay.